Navigating the energy landscape. The impact of price changes in renewable energy transition on investment opportunities. In the intricate realm of energy investments, the winds of change are blowing stronger than ever. As global dynamics and environmental imperatives drive the transition to renewable energy, investors find themselves at the crossroads of traditional energy sources in the burgeoning green revolution. Understanding how changes in energy prices and the shift towards renewables intertwine is crucial for discerning and capitalizing on investment opportunities within the energy sector. The pendulum of energy prices. Energy prices, akin to a pendulum, swing between highs and lows, influenced by geopolitical events, supply-demand dynamics, and global economic conditions. Investors in the energy sector must adeptly navigate this pendulum, recognizing that price fluctuations not only impact profit margins, but also shape the attractiveness of various energy sources as investment options. Consider the volatile nature of oil prices, a cornerstone of the traditional energy landscape. As oil prices surge, exploration and production companies witness increased profitability, prompting heightened investment in fossil fuel projects. Conversely, a downturn in oil prices can squeeze profit margins, rendering certain projects economically unviable, and impacting the valuation of energy companies reliant on traditional hydrocarbon sources. Renewable energy as a disruptive force. In recent years, the energy sector has witnessed an unprecedented shift towards renewable sources. Driven by environmental concerns, technological advancements, and government policies promoting sustainable practices. This transition introduces a paradigm shift, not only in the types of energy being produced but also in the investment opportunities that emerge. Renewable energy, encompassing solar, wind, hydropower, and other eco-friendly sources, has become a focal point for investors seeking both financial returns and alignment with environmentally conscious principles. The declining costs of renewable technologies further enhance the economic viability of these projects, making them increasingly attractive from an investment standpoint. The green wave of investment opportunities. The rise of renewable energy brings forth a wave of investment opportunities that ripple across various sectors. Companies engaged in the development and manufacturing of renewable technologies, such as solar panels and wind turbines, become compelling targets for investors eyeing the potential for exponential growth. Consider a solar energy company riding the wave of innovation and efficiency gains. As the cost of solar panels decreases and efficiency improves, the company may experience increased demand for its products, translating into robust revenue growth and enhanced shareholder value. Investors attuned to these technological advancements can strategically position themselves to capitalize on the transformative potential of renewable energy. Government policies and regulatory catalysts. Government policies play a pivotal role in shaping the investment landscape within the energy sector. Subsidies, tax incentives, and regulatory frameworks influence the economic viability of both traditional and renewable energy projects. Investors must carefully monitor policy shifts and anticipate their impact on the risk-return profile of energy investments. For instance, a government committed to reducing carbon emissions may implement policies favoring renewable energy projects through subsidies or tax credits. Such initiatives can significantly alter the competitive landscape, providing tailwinds for companies operating in the renewable space. Conversely, changes in regulations affecting traditional energy sources may present headwinds for investments in fossil fuel-centric industries. The resilience of energy infrastructure investments. Beyond the dichotomy of traditional versus renewable energy, infrastructure investments emerge as a resilient and often overlooked avenue within the energy sector. Energy infrastructure, encompassing pipelines, storage facilities, and transmission networks, forms the backbone that facilitates the flow of energy from source to consumer. Consider a scenario where a company invests in building a robust transmission network for renewable energy. As the demand for clean energy grows, this infrastructure becomes increasingly valuable, creating a dependable revenue stream. Infrastructure investments, characterized by long-term stability and often insulated from short-term price volatility, offer a strategic avenue for investors seeking both income and resilience in the energy sector. Global perspectives in emerging markets. The impact of energy price changes in the transition to renewable energy extends beyond national borders, creating opportunities in global markets. Emerging economies, hungry for energy to fuel their growth, present fertile ground for strategic investments. As these economies balance traditional and renewable energy sources, investors can identify regions where evolving energy policies align with burgeoning demand. For instance, a country embracing solar energy to meet its growing power needs presents opportunities for investors in solar technology, project development, and infrastructure. The global nature of the energy sector underscores the importance of a diversified and internationally aware investment strategy to capture emerging trends and capitalize on growth opportunities in diverse markets. Risk mitigation and ESG considerations. As investors navigate the evolving energy landscape, environmental, social, and governance (ESG) considerations come to the forefront. The risks associated with climate change, regulatory shifts, and societal expectations are integral components of the investment decision-making process. Companies with robust ESG practices not only mitigate risks but also position themselves favorably in the eyes of investors increasingly prioritizing sustainability. Investors mindful of ESG factors may, for instance, favor companies investing in carbon capture technologies or those with a track record of reducing their carbon footprint. The integration of ESG considerations into investment strategies aligns with the broader shift towards responsible investing, where financial returns coalesce with positive societal and environmental impacts. Conclusion. The dynamic interplay of energy prices and the transition to renewable energy creates a mosaic of investment opportunities within the energy sector. Investors, equipped with a nuanced understanding of these forces, can navigate the complexities of the evolving landscape. Whether capitalizing on the resilience of energy infrastructure, embracing the green wave of renewable energy, or strategically positioning themselves in global markets, astute investors recognize that the energy sector's transformation brings forth a kaleidoscope of possibilities. In this era of change, those who adeptly balance risk and opportunity stand poised to harness the power of energy investments that not only yield financial returns, but also contribute to a sustainable and resilient future.